Barclays coming in with a downgrade to the retail sector to neutral from positive. The firm citing intensifying promotional activity as one of the reasons behind the call, saying it could be pointing to a weakening demand backdrop. Adrienne Yih joins us now. She's Barclays Consumer Discretionary Senior Analyst. Adrienne, it's always great to speak with you. Talk to me about how much the macro environment specifically is driving this call, because I think that is one of the bigger concerns for our audience more broadly, is just the degree to which we are seeing the macro question of softening showing up in company-specific news. How much did that drive this view?
I think it's about 80% of this view. What I would say is, if you recall, last year it was all about cleaning up the inventory. And so there were a ton of promotions last year, and rightfully so, right? Because these companies were trying to get rid of that inventory. We are seeing the same level of promoting now that the companies have clean inventory. So what that basically means is they're doing it for an entirely different reason. They're doing it to drive and stimulate traffic and conversion. And that's clearly an indication that the consumer is very choiceful and pulling back.
Is this going to be a trend that you see sticking with retail, or something that retail is going to see now for quite some time? And then the ability to navigate that, how challenging is it given the macro pressure?
Yeah, so whenever there's an ebbing tide or a rising tide, we always go with the 80-20 rule. 80% of companies, right, they live in that kind of sphere of what is actually going on, kind of in the broader economy. There will always be 20% of companies who it's their brand moment. We've talked about the denim ship benefiting a Gap or an Eagle or an Urban, Skechers and Deckers and On, right? They all have brand momentum. So I named like 7 companies out of maybe like 40 that we cover, right? DKS is another one that's going to benefit from kind of all, selling all of the hot brands. So it's a very choiceful kind of consumer landscape. By the way, the consumer's not unhealthy at all, like the macro. We are at record lows of unemployment. And what's actually happening is this inflation is just so insidious. It's just eating into the kind of mental, that negative wealth effect. And that's what causes people to pull back on spending.
Adrienne, let's talk about the denim of it all, because I'm just fascinated by this. As you just noted, you've got American Eagle, Gap, and Urban benefiting from the shift in denim silhouettes. If we didn't have this cycle that I feel is primarily driven by TikTok that made us shift through trends so frequently, would these still be among your top picks of retailers?
This is what I would say broadly, that is a trend that can buck the broader, weakening consumer malaise is sort of, the new news. So what I would say is we would be looking for companies that are structurally improving, but I think that you would see far fewer names in our roster of things that you want to own. It is really, really hard to kind of pick that bottom when the overarching kind of, demand environment is getting weaker.
Adrienne, I want to bring up Nike, because it's one of the names that you've recently downgraded to equal weight back at the end of June. I'm curious, as we look ahead, we're not going to hear from the company for several weeks in terms of their earnings report, but some of the challenges that they have faced, whether it's the product pipeline, whether or not they're no longer registering with consumers, what is it that Nike needs to do in order to really implement that turnaround story?
I think with Nike, I think the frustration that we had, with kind of I would say kind of the thesis that we had is that each quarter it would seem that we were coming into the earnings with what we thought was the company's sort of 1 to 2 year strategy, right? What we found out, at one point it was to go to DTC from wholesale, then it was to go back to wholesale, then it was to franchise manage in the most recent quarter, meaning that they are going to hold back product from the DTC channel. So it's very hard for, us on the outside to analyze a constantly kind of moving target. And so I do think they can make the next couple of quarters. They gave, 10% operating margin guidance, was down 10% sales. So there's no real kind of risk to the numbers. But at the end of the day, it's a growth company. It is valued like a growth company. They have to grow the top line. And when you think about the proof point, right, of all this innovation, it's going to come sort of mid-year 25. And we weren't willing to kind of be that patient with it at this point in time.
All right, Adrienne Yih, she's Barclays Consumer Discretionary Senior Analyst. Thanks so much for joining us here.
Thanks for having me.